Welcome to our Q1 industrial indicators for 2023. First of all, let's talk about the sales market. One could say that industrial sales volume has fallen off a cliff when compared to the last several years. Q1 2023 only recorded 10 industrial transactions with a total market volume of $15.8 million. This deep decline is driven by several factors. Access to capital is the first one, although this is a bit of a misnomer. There is debt and equity available, although lenders are requiring more equity and higher interest rates in order to get deals done. Simply put, it makes 0 sense for an investor to purchase a building with a 5% in-place return when the cost of debt is 7%. It's going to take sellers a little time to adjust their pricing to match these rising interest rates. We are seeing some sales occurring though in 2 categories: owner-user sales and 1031 exchange buyers that are all cash. Speaking of cap rates, we haven't seen much fluctuation in cap rates yet. Average cap rates are at 5.2%, only a slight uptick from the last quarter. This is due to just a simple lack of properties trading and therefore a lack of comparable sales. As mentioned before, it will take the market some time to adjust to the shifting debt and equity markets. Next, let's talk about industrial vacancy, which is currently sitting at 2.6%. Interestingly, we've seen a real bifurcation in the industrial space, with demand for bulk space over 100,000 square feet remaining really strong. And there's been a slight softening in the market for spaces under 10,000 square feet. To me, this is an economic indicator that those smaller locally owned businesses simply are not surviving or adapting to the changing economy. Or maybe lease rates have finally hit that tipping point where it no longer makes sense for a company to remain in business or occupy as much space. On a brighter note, some companies are expanding, and we are seeing smaller companies either selling or merging with one another, which is resulting in redundancies in their overall footprint. Similar to cap rates, there has not been much fluctuation in published asking lease rates. They're remaining steady around 75 cents a square foot. Although anecdotally, the lease rates may not be coming down, but there is potentially some wiggle room in lease concessions, such as abated rent or higher tenant improvement allowances. This is really depending on the specific situation. Overall, Northern Nevada is experiencing strong industrial demand due to our location and business-friendly tax climate. These indicators point to a relatively flat and stable industrial market in Northern Nevada. For more information on how this may impact your specific situation, please give me a call to discuss. I look forward to hearing from you.